Hi everyone, welcome to the Week 10 market recap. This week we'll be looking at the market movers, losers, current macro trends, and economic headlines from around the world. This week's market mover is Qantas Airways Limited. Qantas's share price has risen by over 7.07% in the past 5 days alongside the booming performance of other travel-related companies. Qantas recorded one of its largest gains in the past 12 months after Delta Airways reported strong revenue growth during its first quarter and solid bookings for the June holiday period. The relaxing of COVID travel restrictions has boosted the confidence of both investors and travelers alike. Our market loser this week has been Propel Holdings Limited, with their share price in the last 5 days dropping 21.05%. Propel Holdings is an Australian fintech company providing multiple financial products to small and medium enterprises. The company has recently undergone a cessation of securities and experienced a trading halt, according to the ASX. The Dow Jones, the S&P, and Nasdaq all experienced a negative closing this week, whilst the ASX closed 1.13% higher than last week, thanks to traveling stocks taking off. The AUD/USD exchange rate has remained about the 0.74 mark, only slightly depreciating from last week's 0.75. On the macro trends front, the cash rate, inflation, and unemployment have hovered around these levels for some time. The RBA has kept interest rates on hold primarily as the cost of living grows. Qantas and Flight Centre recorded an increase in their share prices over the week, a positive sign for an industry previously shut down and battered by COVID travel restrictions. Factors leading to this increase include Delta's strong revenue and promising bookings for the summer holiday rush in America, and a global upturn in consumer confidence. The relaxation of pre-departure testing and vaccination requirements for travel to and from Australia is also likely to have supported the takeoff for these stocks. In other news, China has avoided a significant rise in inflation, with Chinese consumers seeing prices increase by around 1.5% in the past 4 weeks, compared to 8.5% and 7% experienced by consumers in the US and UK. The Chinese government have been able to avoid the economic problem more prevalent currently in Western markets. The People's Bank of China spent most of 2021 trying to suppress borrowing to cool down the booming real estate market, in contrast to what was done within Western economies. Whilst the Russian invasion into Ukraine has not been easy for China, the world's largest importer of oil, China has prioritized self-sufficiency and national security by exploring alternative energy production and agricultural methods. Within Sri Lanka, the continual economic crisis has worsened this week, with protesters in the streets demanding stable economic management and governance. The current economic crisis can be drawn into several factors, including a political decision to cut taxes, the downturn in international tourism, which has been a key driver of Sri Lanka's foreign exchange reserves, and a failure to manage external debt and astronomical oil prices. The Sri Lankan government has warned creditors of a potential default on foreign debt repayments, and they are currently in negotiations with the IMF for an emergency aid package. And that is a wrap on the economic facts, figures, and headlines for the week. Be sure to tune in next time for UNSW EchoSock's Market Recap.